Everyone wants to save on taxes, but most people miss the easiest chances to do it. Today, I'm giving you a rapid-fire list of 7 moves to make before December 31st, plus 2 bonuses at the end to avoid leaving Uncle Sam a tip. Thanks so much for joining us today. I'm going to run through these quickly, but don't worry. Down below in the description, I've got links to free guides and other videos covering just about every single one of these strategies in more detail. Let's dive in. Number 1. Most people know they can contribute to an IRA for themselves, but they don't realize that even if their spouse doesn't work, you can still contribute for them. In 2025, that's $7,000 or $8,000 if they're over the age of 50 that you can contribute pre-tax for an immediate deduction. You must be making less than $246,000 to get the deduction though. Number 2. Selling investments at a loss can help offset gains and allow you to rebalance your portfolio or take an ordinary income deduction by up to $3,000. This is called tax loss harvesting, the act of intentionally selling investments while they're down to be able to also take gains from other investments while they're up. The two can offset each other, allowing you to rebalance the portfolio without paying capital gains taxes. The only thing to look out for is what's called the 30-day wash sale rule, which means you cannot intentionally sell one security at a loss and then rebuy that exact same security within a 31-day window. Number 3, mutual fund distributions. If you own mutual funds inside of a taxable account non-retirement account, those mutual funds make trades on their own, buying and selling inside of the fund. At the end of the year, they might generate capital gains without you knowing until you get your 1099. Check your fund's distribution schedule and consider selling the fund before the ex-dividend date to avoid unnecessary excess capital gains income. Number 4. Charitable giving only helps your tax bill if you're going to itemize deductions, but with the new SALT deduction cap increases, that's state and local taxes that went up with the new OBBBA tax bill, a lot of people who weren't itemizing before might be able to itemize again. So step 1, ask your CPA. Step 2, if you're going to itemize, make your charitable contributions with cash or appreciated stock to avoid capital gains on the sale of those positions. Another reason to donate in 2025 and not wait until 2026 is that there's a new rule in the OBBBA legislation where you're starting in 2026, you're going to have to hurdle your first few $1,000s of contributions before being able to deduct. Again, I'll drop a link in the description for a free guide that you can download about all the OBBBA updates made easy. Number 5. Most people know about normal 401k contributions, but just in case you think you're maxing out, and you're really not, because that's the reality for a lot of people. The max under the age of 50 is $23,500. The max over 50, $30,500. But if you're a business owner or have access to a profit sharing plan, listen up. The real max available to you is $70,000 for business owners under 50, $77,500 for business owners 50 to 59, and $81,250 for those 60 to 63. That's an extra $40,000 of pre-tax contributions that are available to you to immediately reduce your taxable income that you didn't already know about. Ask your 401k plan provider. You have to get this done by 12/31. Number 6. If you have a high deductible health plan, the HSA contribution is a triple tax win. You get a tax deduction upon contribution, You can grow the money inside of the account tax-free, and then you can take tax-free withdrawals for qualified healthcare expenses. You never lose your money inside of an HSA. That's an FSA. We'll talk about it next. The 2025 limits for HSA deductions are $4,300 for individuals, $8,500 for families, plus an extra $1,000 if you're age 50 or older. Number 7, FSAs, flexible spending accounts. FSA funds are use it or lose it, but you can still get a tax deduction today. So if you have a low deductible health plan that doesn't have access to an HSA, you probably have access to an FSA through your employer. And if you do, you can make a tax-deductible contribution to the FSA plan. You just need to make sure that you use the money by the plan deadline, which is usually something like 12/31 or January 15th or February 15th. Check your plan. The contribution needs to be made by 12/31. Okay, that's 7 ways to immediately save on taxes before the end of the year. Here's 2 bonuses before we wrap up. Number 8, review your withholding. This is something to look out for, not to necessarily save on taxes, but avoid underpayment penalties. So if you're having your best year ever, you've made a lot more money than you have in the past, be prepared and ask your CPA to help you run an estimated tax. That way you can see how much withholding has been done and if you've contributed enough this year to avoid an underpayment penalty. Again, ask your CPA about this one. This is still a way to keep extra money in your pocket and not give a tip to Uncle Sam. Number 9, annual gifting. For those of you that are concerned about estate taxes, in 2025, you can gift up to $18,000 to any one person without having to file a gift tax return or touching your lifetime exemption. You can gift to each grandchildren, you can gift to each child, your spouse can do the same thing. It starts at just $18,000 per person and goes way up from there. This must be done by December 31st. Let's wrap this up. Go through this checklist, talk to your advisor. Even 1 or 2 of these moves could help save you a bunch of money. Down below in the description, if you have questions about any of these specific strategies, I have links to both other YouTube videos and guides that you can download for free. You can also go to our website, www.wealthrb.com, where I have a whole page of free guides that you can download. And the promise I'll make to you today is that if you don't see the guide up there yet, it's a brand new website. I haven't gotten them all yet, but I have every single guide you can think of. So you have questions about a strategy, send an email to info@wealthrb.com and just request the topic you're looking for, and I'll send you the guide for free, no strings attached. Thanks so much for joining us today. Don't forget to hit that subscribe button. We'll see you next time.